As investors look to the reopening of the U.S. economy to help support equity markets, our next guest has a few reopening trade ideas of her own. Let's bring in Karen Finerman, CEO of Metropolitan Capital Advisors, and, of course, a Fast Money contributor. Karen, good to see you. So I think when we think reopening trade, right, the first things you think about, of course, are the airlines, the hotels, the malls, some of the restaurant groups. But you actually like also some of the big cap pharma names. Tell us how you think they benefit from a reopening.
So what's happened for big cap pharma is that the whole country, the whole world really was very preoccupied, of course, with the pandemic. And a lot of people didn't end up going to the doctor last year like they would have normally done. And prescriptions didn't get written. And I'm optimistic that that will turn around as we reopen. You know, even Merck talked about they think they lost 5% of revenue from people not going to the doctor. So 5% of revenue is actually a very big number. So as we start to see people come back, I think you're going to see revenue growth here, and it's not reflected at all. So when I look at the stocks like the ones you talked about that are real reopen trades, like a mall or airlines or hotels, the stocks have already rallied very hard, and in some cases, I think sort of too far. I own a couple of those, but I think they're starting to really be priced in, like a LiveNation. So, you know, that's about as reopening trade as you can get, stuffing thousands of people in a closed space and having them scream for 3 hours. You got to be really comfortable with the reopen trade. Yeah. The stock fully reflects that. So I don't think the risk reward there is as compelling as some of the big cap pharma. And I think even without that, we haven't seen these kinds of prices relative to the market for what are some very, very high quality companies. Great cash flow, great balance sheets, even some great dividends. I don't like to buy for the dividend, but I'm not going to hold it against them if they have a great dividend. So there's a lot to like, and it's got that sort of under-the-radar reopen trade. Yeah, not to mention the goodwill that some of these big pharma companies are now receiving as a result of, you know, discovering these vaccines that many of us are benefiting from. So that's a sort of little added asterisk there as well. Karen, you also like financials. Tell us why you like that, and maybe some of the perfect storm elements that really create a compelling story for financials. Yeah, so a lot of great things are happening at the same time for financials, and obviously they've run up. But some of the things for me that I really like, so let's look at the money center banks, which are the ones I own. So JP Morgan and Chase and JP Morgan, Citibank, Wells Fargo, Bank of America. When I think about their businesses, it's not just lending, but I think as we reopen, lending will come back. You have rates going up, so margins expand. In addition, you have capital markets business for, you know, the big three. That is enormous. It's been just, you know, the SPAC wave, which is slowing now, but it's been incredible. We're still seeing a lot of IPOs. That capital markets business is really great, and the asset management business is really great. Plus, they can now start to do buybacks. And on top of that, I think we will see the release of some of the reserves, the gigantic reserves that they took during the pandemic. So that will be a boost to earnings. I know that's a one-time boost, but it's still, you know, it is additional earnings. So all of those things are happening at the same time. And so even though these stocks have moved a lot, they still trade at a discount to the market, which they always have. But the discount is not, it's not so narrow that they're not attractive. So I like the space a lot.
Shepard Smith here. Thanks for watching CNBC on YouTube.